Yes, sir. Respected CEO, sir, and directors, Director Academics, Dr. Muralidharan, our faculty members are there, our CDO is there, Mr. Gupta, and dear participants, we are very pleased to inform you that our chief guest, Mr. AP Hota, has joined us, and this is the last of the Leader Speak series today. And I'll start the program with a brief profile of our guest. So all of us have heard his name. Yeah, sir has a banking experience of 27 years across technology payment systems, and he has been the MD and CEO of the National Payment Corporation of India for a period of 8 years. Sir has played a key role in implementation of micro technology in check clearing, electronic funds transfer, automated clearing houses, check truncation system in India. He was the head of Department of Payment and Settlement Systems in Reserve Bank for a period of 3 years, 2005 to 2008. And his key contribution was a legislation of the Payment and Settlement System Act, introduction of NEFT, RIP, and usage of RTGS systems. You all know, bankers, you all know, creating the vision of a new institution for all types of retail payment system and for launching India's own card scheme RuPay. So for this, in 2014, sir also received a commemorative memento from the hands of the President of India, Shri Mukherjee, on the occasion of dedication of RuPay to the nation of Rashtrapati Bhavan. Presently, sir is a director of the board of IDBI Intech Limited, Motilal Oswal Asset Management Company, and NSDL eGov Infrastructure Limited. He's also a director of Federal Bank, and sir has experience of working in the boards of Vijaya Bank, Andhra Bank in the past as RBI nominee director. Sir, we welcome you to the program. And sir, this is the 10th Advanced Management Program. And sir, what I learned in the last conversation I had with you was that you were associated with the first batch of AMP, which is actually, and so it's a great pleasure that we have invited you today and you accepted our invitation. You were also instrumental in the making of the syllabus of AMP, partly the technology part module we have. So now we have expanded. We have 18 modules this year, and we have the emerging technologies. Separately, a module has come to talk about business analytics, other than data sciences and artificial intelligence. And so we have 83 participants this year, and from 23 banks. We have all the public sector banks. We have from RBI. We have from private sector banks. We have from Abu Dhabi Emirates. One person has joined, so it's a big batch of 83 people. And the batch, this is a last semester, almost a few weeks are left in the completion of the program. Now I request our CEO, sir, to please give a welcome address. Sir, please.
Right. Thank you, Ravita. Welcome, Hota, sir. It's a great pleasure to have you with us. As Ravita said, two batches are now completing their AMP program this time, and we have combined both the batches so that they will have the privilege to listen to you. And welcome, participants. This is the last Leader Speak series, but let me assure you, this will be one of the best Leader Speak series, right? So let me tell now when we talk of digital banking or all these developments in digital banking in and around you, it doesn't give you goosebumps, right? That is primarily because the large part of your trouble has taken by Mr. Hota when he started this NCPI in 2013. Now we say that the digitization is becoming the new normal. You are able to say that because of the efforts of Mr. Hota, because he was the first person deputed from RBI who took over as the MD of NCPI. And I had very close association with him when I was the general manager at Delhi, and I have seen him and his team working closely, not only with the regulator RBI, but also with the bankers, so that all the technologies which are developed by NCPI are accepted by the banks, right? So this demonstration that the key success factor of the bank resides the ability to fully integrate the digital into their business. This particular statement. If it is now holding good, it is because of the rapid strides taken by NCPI under the leadership of Mr. Hota. Right. So as the last KPMG study pointed out, that digital disruption is gradually changing the way banking has been done in the past decade. Right. This branchless banking, all this your RuPay cards, all these things, right, which has become now new normal. It started taking shape sometime in 2012 and 13. It is almost a decade which has cemented its place. And NCPI not only is acknowledged in India, it is well acknowledged outside India also. Hota Sahab, hats off to you. And on behalf of the IIBF, on my personal behalf, and on behalf of all our participants, we are eager to hear from you why the developments, how it happened, how it is going to change the banking in future also. Not only what has already been done in the last decade, going forward also how it will change. I will not stand between you and participants. Even I also want to listen to you. Thank you.
My pleasure, Mr. Das. Thank you, Rabita. Thanks to IABF for inviting me to this 10th batch of AMP program. Yes, I was associated in the first and second batch long back, and digital banking course had been designed in association with NPCI, means IIBF and NPCI, that course module, digital payments module. But it is a great pleasure. My thanks to all of you, really, and my deep appreciation to all of you for participating in the program, spending time on Saturdays, Sundays for our own personal development. Yes, it is some rigor is there for about 10 months, but it is worth, so my appreciation for that. So in my interaction with you today, possibly I would cover three main themes. First, the importance of technology management in banking business. All of you are from banks. This subject is taken for granted. It is so much taken for granted that we think there are no issues. There are issues in technology management in banking. We'll talk about a few high-level, broader issues in technology management. The second thing which was highlighted in his very generous introduction by CEO is about the digitization of payments, and how digitization of payments is not just digitization of payments, but it has a spin-off effect in many areas in banking. That is what we'll talk. And third, time permitting, we would also talk about the importance of collaboration with fintech. So let me talk to the first area on technology management in banking. Today, technology plays such an important role in whichever area you are working, be it at the branch, taking care of all aspects that branch offers to its customer, or in the zonal office or regional office, or in the head office. You are in corporate banking, or you are in treasury, or whether you are in finance, whether you are playing the role of a CISO or in the risk management department. Even if you are in the personal department, HR department, in every areas of activity, you would find technology is the key. New business challenges are coming, and you keep on brainstorming how to resolve it, how to find a solution, and ultimately can it be done through technology? Even if you know very well from your intranet of your own bank, the kind of RBI circulars keep on coming. Almost in a month, almost 10 to 12, and in a year, almost 150, kind of circulars would be coming and they are being bombarded to the banks. And all of these circulars have got regulatory provisions and they need to be adhered to. How do you, all the circulars need not be the change related circulars. Many of them may be just an enforcement. But for full compliance of all these circulars, you'll find ultimately technology is the key. If you do a survey of all the RBI guidelines, master circulars, directions, you would find you would key to all the managing all the compliances are in technology. RBI really issues a circular on, suppose, some provisions on NPA management. And NPA management really, or KYC related circulars. They would also indicate that our study shows that these are the things, irregularities at the branches, this is the outs, at the system level, this is the level of outstanding, and banks would have to comply with that. Then when the banks search for that, how can we resolve it? They would really say, ask the department, why are you not doing it? No, sir, really, we are doing to the best possible way. I don't know how it escapes the attention. We don't know how the internal audit has found out so many discrepancies. You know, when the statutory auditors at the end of the year, they visit the branch or they do the remote audit, they would have really 40 observations relating to the branch. Or for a particular activity, some 150 observations. In all the 150 observations, while you are trying to defend this thing, you will find that the technology is there. Then while dealing with the technology, a lot of errors have crept in. Either manual errors, because maker and checker drill has not gone through, or even it has escaped the attention of both maker and checker, or the configuration itself is wrong. No, sir, I did as per the systems, but I don't know how the error has come. So the number one, the digitizing the activity, all the activity. While digitizing, you see to it that whatever digitization that they have, you have done, the man involvement. After all, all the computerization or digitization that has happened, it has still got an operating element. Even human involvement is there. There we have made the mistake. While designing the solutions and parameterizing, we have left out certain parameters. Although it is very much there in RBI circular, you should do the load these parameters, but still then parameters are missing. So it is a continuous exercise at the bank level. So in your operations, day-to-day operations, in the bank's operation, while your goal is to really do as much, efficient, make the operations as much efficient as possible. In the technology, you are using also the technology as much as possible. Possibly while implementing, while training the people, certain things are still missing. So if you, in your whole journey towards the quality management in service, a constant battle is on to improve the technology. And what other technology can be done? Can some human aspect, human thinking which is going on, that also can be done by the system? Possibly that is where the artificial intelligence comes. With the artificial intelligence, possibly you are thinking something and the machine is also learning. Machine has got the rules. On the basis of rules, it can also point out the apparent errors, so that even we ourselves become efficient with the intelligent information that is provided to us. So artificial intelligence and analytics is not just really creating MIS, customer segmentation, better view of the customer. They are all traditional benefits which all the banks are already deriving. But making our work also more efficient, and many of these routine, mundane, because banking job, many of the activities are routine and mundane, repetitive. So the repetitive activities would have to be how they can be automated, and robotic process can be introduced more and more. So you would have heard in your head office, in the technology department, in good old days in the banks, there used to be only one department, information technology department. This information technology department, they were involved in procuring of computers, computerizing because it is now core banking is already installed. Although the core banking is just the really 20% or hardly 10 to 15% of the computerization, I will say now. In good old days, computerization means 90% of the computerization is over. Because now the scope of activities in the banking system is getting so sophisticated, the core banking system is just a part, it is an essential thing. Like you are setting up a branch, identifying a premises, giving a color wash, creating a cabin, few counters, setting up the computer. These are all essential things. Similarly, having a core banking system is almost like putting up a light or a fan. It is nothing more than that. It is just a part of the basic infrastructure. But real banking is beyond core banking. So the core banking has its several limitations. Core banking is also evolving. As you would have seen, this Oracle, this Finacle has undergone several versions. In the latest versions also there are hundreds of bugs. And each bank would have to computerize, has to customize many things. But beyond that, you will find in the lending side, your loan management system is separate, treasury management system is separate. Whatever is provided in the core banking, the basic services for bank like the large public sector banks or large private banks, even for them, even the core banking is just very simple. On the top of that, hundreds and hundreds of utilities would have to be separately procured and make it secure. Loan management, treasury management, trade finance, CRM tool, you're in the forex management, 4-5 solutions, in AML, KYC, 4-5 solutions. You go to even generating different kind of compliance reports to Reserve Bank of India. There are compliance solutions, AML solutions. So these solutions, all in a modular structure, they are catching to each other, and they are making a coherent whole. So technology is getting complex. So it is no longer the IT department who are used to the traditional IT, giving the order to the vendor himself will give, prescribe these are the PCs you have to purchase, and that is done. So now a digital banking division, another department. Many of the banks participating here, you would have seen digital banking unit have come. Now with the fintech coming, fintech department has come. Previously, information IT department used to handle the information security also itself. Now the information security is a subject by itself, for which there is another information security wing is there, which is a battalion of people are there. There is one SOC security operations center, which is a center by itself with 20, 30 people. And for large banks, I don't know how many people round the clock, they are monitoring the activities in the banking transactions. So your head of technology, head of digital banking, head of fintech, head of security, all of them are all on security things and providing the support services to many of you who are in the real business of mobilizing deposits and giving the lending or doing the treasury operations. So you are making money by lending, and you are earning interest. You have got a net interest income. For you mobilize deposits and pay interest, give lending and collect interest. You have a net position. You make money on that. The surplus money, that investable money, you invest in the treasury operations. You do the treasury income. You have the fee-based income. So for your bank to be profitable, you are getting money from net interest income. You are getting from treasury income. You are getting from fee-based income, plus other ancillary services, third parties, services you are providing. You may be providing like insurance and investment, and there you are making money. So your business to grow, the support services are these people, the technology people. And these technology people would have to take care of your needs, means the business needs. It is a good bank would be one where there is a creative tension between the business and the technology. And you would have seen also business and technology. In a good bank, they would be always fighting. And that fight is good. That creative tension between the technology and the business is good, because businesses say, I want this. I want this. The utility that you have provided is not working. It is not up to my standard. I have seen my friends in other banks say that they have this solution that works very good. So your technology people or digital banking folks are always challenged that we have got this solution, it is not working, how can we get it? So in technology, this is one challenge to make how technology as a support service to banking business is efficient. And that management itself is a particular skill set. And that skill comes not just by hiring technologists. These people should have reasonable exposure to banking also. In good old days, in 80s, 90s, it is just the people who went in general banking, they became the technologists. So in many public sector banks, you will find the CTO, chief of technology, chief of digital banking, even CISO, you will find many of them maybe MA in literature. In fact, I myself am a literature, but I joined really, did the technology part and technology-based payment system part in Reserve Bank and then in NPCR. So, but today's world, possibly that much of technology is exposure is not adequate. Many of us, because the way you are working on Saturday, Sunday, and skilling yourself, upgrading your skill, the same way we underwent the process of working hard on Saturday, Sunday, like you are doing, and learn the technology skills and work over there. So this is part one of the technology management. In the technology management, another segment which has become very, very relevant in today's world is as banking business becomes so that much dependent on technology, the downside of technology is also good section of people are not technologically literate. And people themselves, our customers are also not digitally literate. there is a risk, and there is a cyber risk. So cyber risk has become a very, very important risk in the banking business, and cyber security risk has importance is also noticed by the Reserve Bank of India. The cases of frauds, cases of ombudsman complaints on the customer's account being stolen or customer being defrauded. The banks themselves are also spending so much of time and energy in building the fortifying the IT systems, training the customers. At the same time, the fraudsters are going as new and new type of transaction processing, not just payments, but other transaction processing happens. The risk of data loss, the risk of the data compromise, personal details compromised, and accounts being defrauded are many. The banks are losing significantly. RBI also publishes the data on a regular basis. The IDRBT system, Reserve Bank has created the RBI setup, and RBI Observatory also, the IDRBT Observatory also carries out security drills. RBI has issued a number of circulars on this front. So in good old days, RBI used to issue circulars on computerization, how much of computerization you have. In the current system, RBI's focus on technology is the cyber risk. So RBI has indicated, apart from your technology policy, at the policy level, if you see all the index of your internal board approved policies in your own bank, in your intranet, you can just check. In the technology matters, there will be about 7-8 policies: information technology policy, information security policy, information security audit policy, then latest being the Fintech policy, the outsourcing policy, IT procurement policies. All these policies have gone to see that these whole systems are secure. As per the recent guidelines, in fact, the last year, RBI had also brought out in the digest of cybersecurity guidelines, and they have said in the care, key risk indicators, some 27 types of technology risks are identified, which risks would have to be measured in which particular way. They have also indicated the bank boards, the senior management of the banks are required to understand each of these risks, technology risks, and bring out a threshold and monitor that threshold. They have to do the VAPT tests, just the DR test. Once, previously the risk was, the only risk they were talking about what happens if our primary data center, there is a fire or data center is not available. So DR drills have stabilized over a time, and it is no more a new thing for the banks. DR drill has been going on for last 7-8 years now, meticulously. Normally, once in 3 months, the major banks are going for DR drill for their critical items, critical components in the data center, and non-critical items once in 6 months, and very low criticality item about once a year. The DR drill is going on. Apart from DR drill, the VAPT test is going on. Apart on the top of that is the annual audit is there. The statutory auditors, their scope has been broadened. That statutory auditor, when they do once a year, they would also have a comment on the security systems in the bank. And also internal audit. You see the level of audit. The internal audit, annual statutory audit, annual audit that the banks gets through one of the CISA and certain verified agency. RBI has indicated that there has to be a high-level senior management level committee called Information Security Committee, ISC, where the MD and CEO is the chairman of the committee. There has to be a board level committee. All these people are exercised to see that the technology is robust and the security systems are clear. And 3 years back, now this is the third cycle going on, RBI itself goes for information security audit. They have got annual inspection. On the top of that, a separate inspection takes place pure on IT, CSITE, Cybersecurity and Information Technology examination, CSITE. So 6 to 7 layers of activities are there to see that this management, security and IT systems are secure. Because IT system is very important. Cyber security is important. There are banks which have really lost, in the data. If you do just the Google search, the kind of data you find. RBI website, if you go, the data is fine. So this is the second aspect that I talked. Broader issues of IT management. Second is the information security and the kind of prescriptions that RBI has been given. And third item that I would touch before breaking for taking question, going for question answer session, is the Fintech. In the during the initial period, the banks, the only way the banks were engaging the outsiders in the computerization activity, where some degree of outsourcing. They were doing the outsourcing of data entry work. Huge voluminous data entry work used to be done. It used to be verified once again. And you can say in the initial period, during the late early 90s, I'm not talking about the 80s, 90s, and between 2000 to 2005 or 10, even these Infosys, TCS, Wipro, HCL, L&T, Infotech, all these players also, they have grown very big now, but they were also doing a lot of work for the bank closely. But now it is there only the core banking work is not adequate. We need a lot of microservices so that our work is a little better. Banks are banks in India, in one way, because the late entrant in computerization, they got a good core banking package compared to American banks or European banks. Indian banks are technologically much better positioned today because we are late entrant. We got better technology. We are better equipped. We have got better systems. Sometimes we feel that the foreign banks are very good. Well, foreign banks were very good some time back. Now really they are as good or maybe inferior, means may not be the banks in India on overall way is much better technologically than American counterpart or this European counterpart. So when you take the name of Citi and Bank of America and Chase and all these things, that you don't feel that they have got a superior technology. Don't feel that. Means banks in India would have to come out from that psychology. We are the average Indian bank is technologically better equipped than some of the big giants in big American banks. Well, in some areas they are better. They are investing huge amount. they are catching up in many areas. So this fintech partnership now has they were also fintechs at some point of time, but now you can say they have become big techs. So fintechs are those possibly who joined as outsourcing agents, who sat at the bank's premises. Then when activities become very large, they sat in their own premises with fully under our control, bank's control, with a dedicated pipe, dedicated computer, fully under control. And thereafter, giving a little bit of a freedom that they can do the work on their own. And at later point of time, they can really going beyond that, and they can really acquire customers for the banks. They can really mobilize deposit for the banks. They can do the analysis of data for the banks. So RBI has been refining, has been sensing that this is a risk, and they have been updating their outsourcing guidelines from time to time. So this is an outsourcing activity. If you are engaging such outsourcing partners, be very careful. See that the data that the customers they are acquiring on your behalf, they are your customers. The data that they are collecting is the data. It is you are responsible for that customer's data. The data's ownership is that of the customer, and you are the custodian of that data. You have a responsibility, so you take care of control the outsourcing participants. And if the outsourcing vendor is also engaged in a critical transaction processing activity, you see that they are also certified on certain basic certification programs, like if they are doing the payment system kind of thing, you do PCI DSS, PA DSS, they undergo ISO 27001, 23001. So they do not compromise the operational resiliency of the banking system. You don't grow dependent on these outsourcing agents. If you become dependent, that means you are really possibly your control is minimum. So a checklist of these outsourcing guidelines periodically, and even there is a requirement of the principal, which is the bank, auditing, verifying the outsourcing partner is important. Now, then how does this fintech come? In fact, it is a smooth, gradual process of the same outsourcing vendor gradually becoming, taking up new ideas without any instructions or any demand for services from the outsourcing partner. They themselves developing solutions, anticipating the needs of the financial sector. And let me limit it to the banking sector, the banking partner. And they would develop solutions whereby they can have a greater control. They can really acquire customers, and they can also dictate. I will not say dictate. They would also have a better term, commercial term, with the bankers. And when the number became large, when a large number of fintech players came up, fintech means finance and technology. They are primarily technology players. They are very good in technology. Their training is in technology, not in banking. But since they know that these tools and processes, technology processes, are quite can be applied to banking, they develop the banking services platforms. And these fintech players, now they are, you can say, in the loan origination, in deposit mobilization, in FLDG lending or co-lending, in data processing, in video KYC. Although the video KYC, the approval would have to be given by the bank, they can initiate the process, they initiate the call, because after video KYC came, it is mostly these are the vendors they are doing. And at the back end, only at the approval stage, only one the bank's person is coming, because RBI has not permitted for final go ahead of a customer without the bank's own staff. So in all areas, they have permeated. To some extent, they have become a threat to the traditional banks, because they have also with them the NBFC partnership. So if they have got an NBFC at the back end, they will acquire customers for the bank deposit part, and for the loan part, they will really give the same customers to the NBFCs for giving the loan, either in their own books, because if they have got a lending part wing within their setup, so they also do that. For the companies, the overall wealth management companies also entering into a lot of lead generation work of the bank, like Paisa Bazaar and so many other players. They really do the loan origination. Even Google has also started the loan origination solution after they become a very big player in the UPI systems, because the payment data of the almost like 300 million customers they have acquired, means they have been able to register on their platform. They have also data about them, and they give the loan origination system to quite a few banks. For agricultural loans and agricultural services in the deeper sector, banks, as it is, they are engaging the business correspondents, and that is there right from 2007 or 8, ever since the BC terminology came up, and that has also taken roots. So the intelligent part of a good strategy, fintech strategy for the bank, is to partnership with them in such a way. You cannot really say that you would have exclusive relationship with me, because they would not like to do that. Even if they sign an agreement, still then outside the agreement they would keep sharing, and you would have, means banks would have no control on that. The best is to really have the partnership with the fintech in such a way that it is win-win for both. It is true that the banks cannot really do so much of voluminous work within themselves. You would have seen the kind of load that the bank branches, even after so much of computerization, the level of transactions that the banks were generating in the year, suppose 2008 or 9, and today in 2022, you take even 10 years gap, 2010 and 2020, it is almost 3 to 4 times that the volume of transactions has gone up, if not more. Means taking all types of transactions together, all categories, not just payments, but your lending, your deposits, the different kind of inquiry services, the complaint management. So all these activities, the banks themselves, if they deploy their own staff, it will be very, very costly. So if there is a method to lower the cost, after all, you would like to be profitable also. So if the profitability margin has to keep on improving, then the cost has to be lowered. You need to really engage in partners. It is difficult to partner. Obviously, competitors cannot partner in except for the philosophical level. So the way one can partner is with the fintech. So confrontation with fintech will not do. The fintech's partnership is a reality. That is the reason that in 2000, as per the early 2021 or late 20, I do not know, the fintech regulations of RBI has issued the fintech, very comprehensive fintech regulations they have published, that every bank needs to have developed a fintech policy. You can check your internal intranet of your bank, check for fintech policy. Then within the fintech policy, the guidelines, which are the fintechs you should go, the board and the senior management to define that we will go for fintech partnership in areas like a lead generation for lending, developing, customer acquisition in the remote areas. We will go for artificial intelligence and developing solutions. Like this, you would have to define which are the eligible fintechs with whom you will do, what kind of control that you would have, how you would do the auditing, how kind of data that you would really collect in the fintech, how often you should really review that, when you should present a report to the board. So this fintech itself has to be managed, or else the banks run the risk that these fintech players, they are quite smart. They would go and really somehow really, if they really say that we can do, because they are young boys, young startups. They have the dreams are there, but dreams are maybe hazy. You are the banker, you ultimately, they will be your customers. So you would have to really assess whether the promises that the fintechs are making is the right one, and with these promises, they will be able to deliver. So this fintech policy in the tech is also part of technology management. Many banks have gone for a separate or a big division of fintech division under electronic banking or digital banking department, and they also have been playing a key role, and they have been playing a transformative role. They are the really key player in innovations. So the 3 points that I mentioned, I've covered. I'll just 2 or 3 couple of points also that I said that I would cover in while talking about on these 3 things, is about how payment system modernization through NPCI is also a trigger for many of the activities other than payments. Let me not talk about payments. Okay, in the payment system, pre-NPCI days. In the pre-NPCI days, you can find, MICA technology, MICR technology, means check clearing being modernized, ECS, EFT being introduced, NEFT being introduced, RTGS system introduced. Post NPCI, because NPCI is primarily for the retail payments, that is the umbrella institution for retail payments. You have got the RTGS version for retail customers, IMPS and UPI for fund transfer. You have got the erstwhile RBI's ECS credit, ECS debit. Now they are available in the form of NECH. Card payment systems, which are primary dependence on Visa and MasterCard. Now the RuPay card, the domestic card. And now India can take pride that RuPay card is so far the only successful domestic card payment system in the world, because China's Union Pay card has gone fully international. But India's, you can say, if China's Union Pay card is taken as domestic card, you can say Union Pay card and RuPay card. There are many countries where they have a very small domestic card system. Even Russia has got also a domestic card. Thanks taking cue from India, they have got a Mir card. So even if Visa and MasterCard have shut down now with the Russia crisis, Ukraine crisis, Mir card is operational, but Mir card is hardly about, as I understand, 10 to 15%. But here in India, RuPay card share in terms of number of cards is almost like 60%, 70%. And in terms of volume, it is still about 40% or so. So in terms of volume of transactions, credit and debit, it is yet to catch up. But in terms of access to the customers, it has caught up. So remittance platform, card platform, toll gate platform like NETC FASTag is now the default in the national highway and even many in the city places. So all this then for direct benefit transfer, the Aadhaar based quite a couple of systems for financial inclusion like PMJDY, RuPay cards, as well as the mobile payment systems like JAM Trinity, Aadhaar Mobile, and RuPay Financial Inclusion Card. And of all these things, the most successful payment has been today is the UPI. And the unique feature of UPI is the interoperability, the splitting the customers dealing with the bank, payment relationship and banking relationship. Payment relationship is taken out and made interoperable. Any bank's app can acquire the customers of any bank. And now the RBI has given the all the work in the preliminary work is over for the interoperability of PPI with banks as well. So be it PPI account, means prepaid account with Paytm, MobiPay, Freecharge and all these things, or a bank account, bank of any type, they've all become interoperable through the UPI. And even the CBDC comes, the central bank digital currency, digital rupee comes, it is learned that that would also be interoperable riding on the UPI platform. So this API technology, it is the first successful API implementation in banking. So this API revolution, API-based payment revolution, now is being applied for a host of activities, including digital lending, deposit acquisition, even the gold loan acquisition by the banks through the fintech firms. All these getting converted with the broader API approach to leverage technology for doing banking business. I would stop here and really take a couple of questions, and then we can discuss as long as you want. I'm available.
Yes.
Thank you so much.
Yeah.
Thank you.
Hota sahab, I think you explained in detail the developments. Now it is open to the participants, how they want to interact with you, to learn from you. Yes, Vidyasagar.
Sir, Vidyasagar here, sir. I'm from Ujjivan Small Finance Bank. Sir, with regard to your RPA, the robotic process automation, what you are stressing, the repeated jobs, because we also done a lot of RPA. Is that, sir, the RPA is what is your view, sir? Is it a threat to the human, this one? Because the way the technology is been developing, because I can see a lot of this one in RPA also, there is a lot of enhancement is happening. Just I want to have your view, sir. Is it this RPA will take over the jobs of the employees, or what is this one, sir?
just let us take one, how it will take away. I don't believe that really robotic process in banking will eat away the jobs. Yes, on a broader philosophy, technology would eat away the jobs, but it will also create a lot of meaningful jobs. Okay, so let us take account acquisition on a digital channel. I would like to open an account. I really go to some some link I get, whether the link has come from Amazon Pay or something, or Paisa Bazaar or somewhere I got the link, open an account. I open an account link, I give my credentials, I give my Aadhaar card with their details, I upload everything. Okay, I'm going beyond tab banking. The many banks have gone, their relationship manager will move around and in 2 minutes they will really do the thing. I'm going beyond that. So you yourself sitting at home, you open the account, you have uploaded everything. At the end of it, once you upload, they all get at the back end. They need to be aggregated, and there is an application for that. It aggregates everything. There is a operation center of the bank, whether it is outsourced agency or your own departmentally done, irrespective of that processes. And now they would do a KYC verification. So in the KYC verification process at the operating center, one bank staff is one bank, 2 officers are sitting. They may not do the KYC verification online 24/7. They may open the account, they will say subject to KYC verification tomorrow, or as per the time indicated by the customer when he is free to do for video KYC verification. So when the video KYC verification, the call would be there, and in the call really you show up, you stand over there, you say I'm the such and such persons. Since they have already got the Aadhaar card with you, from the Aadhaar, the photo is already there. They will really do a check whether the person is the same. When the video KYC is done, your application, this mobile has got a geo-tagging. It knows that you are really doing the call, sitting in Mumbai, sitting in Andheri East, sitting in that particular geo coordinates, and they can really, a rough verification of the address is also done with respect to the person and what is stated in the Aadhaar, and they will see the photo, and they will also ask you that whether it is a putla or yourself a living person. They will ask you to really talk or nod your head or something. They will do that, means you are live. So you do this thing and really verification is done. So at the same time, then it goes to the back-end person and really do this thing. So you are right in saying that had this work been done manually, maybe quite a few man hours would have been there. The manpower would have been deployed and the employment would be there. And now the employment is eaten up by technology. But
sir,
yes.
So I am Arun Marja from Bank of India.
Yes.
Sir, nowadays a lot of discussion is going on about digital currency. What will
let me just finish the point. I will come to the digital currency. This let me handle Vidyasagar's question. So yes, even if it is taken away, the efficiency that the bank has got it. Now the bank has got saved money on that. It is as a corporate citizen, if you have now get more profitability, you open more branches. You do more loans to the people. If you give more loans to the people, more enterprises, SMEs come up. They give the employment. So you saved 5 employment, but 10 employment get generated. So if you bring our societal system, social system, and economic systems efficient, it also generates the job opportunity in an indirect way. So at the end, it is really not a defeating thing. Moreover, for doing the architecting the robotic process, a lot of design process, quality work has gone into that. So you have taken away 5 clerks, you have employed 2 software engineers, and these 5 clerks who have gone away, at a system level, if we do the design thinking, means think as a social design, these 5 clerks who would have remained done the same work for years together, they are becoming entrepreneurs. They may be really maybe they might have set up an ice cream parlor and making more money and built a house. So it is like that thing. Yes, there was a question on digital.
Yes. Yes, sir. I have one question. Sir, how will it impact the normal banking, especially branch banking, the digital currency? Once RBI adopts or Government of India adopts a digital currency, then what will be the impact on normal branch banking?
Okay. Possibly you are referring to the recent budgetary announcement of
Yes.
Reserve Bank's digital rupee.
Yes.
Okay, digital currency. You know, first you want one basic understanding. You all of you may be already fully familiar, but at the cost of repetition, let me tell you that cryptocurrency and Reserve Bank's digital currency, which is called central bank digital currency (CBDC), are 2 different things altogether. Cryptocurrencies are private currencies which does not have any backing, but the Reserve Bank's digital currency is just, you can say, a digital version of the 500 rupee notes or 1000 or 2000 rupee notes, where it is written guaranteed by Reserve Bank of India. The governor's signature is there. There is a backing for that. Anybody who holds 500 rupees, 500 rupee note, he has got 500. The value will not go below 500 rupees. The value remains. It is stable. This 500 rupees. In the cryptocurrency, there is no backing. The governor, the deputy governor, in a recent statement has given a very clear example. It really means nothing, because people say that it is money, or else there is no guarantee. Today it is 500 rupees, and tomorrow it will go down to 125 rupees, and yet another day it can go up to really 2000 rupees. So you know that cryptocurrency is almost like it is like gambling. But this digital currency is a stable coin, whether you hold it in 500, when hold it physically or digitally, that it has a value guaranteed by the central government. These government, in the announcement, they have indicated that by digitizing, after all, the economy is digitized, has got digitized. In a digital economy, why should you have physical currency? Create a roadmap. Any process that can be digitized will inevitably be digitized. Today, you know, all kinds of, you yourself see how much of payments you are doing digital compared to what you used to do 5 years back. Now, 5 years later, the percentage would increase more. And can you really make the payment, whatever you are doing by cash, 5 years later? Can you do all your payments digital? If you can make the Reserve Bank, which issues now really, because as the economy grows, now the economy is supposed 2.8 trillion or $3 trillion economy ending. Mr. Modi says by 2024 we'll reach 5 trillion. It may not happen. It will not happen. because as indications are there, but it happens in 26. So in an economy of 2.8 trillion, the currency in circulation is this much. The requirement of currency to do the transaction, what is these currency notes are meant for? Either they are for store of value or for the transactional needs. And the simple store of value, the hoarders and the black money also get hoarded. That is a different thing. That can be tackled in a different way. But the transactional needs for growing economy, when there are more people would have more money, would require more of transactions. If the economy grows, like you just imagine, if some of you are from villages, from the village level previously, hardly you don't have to buy anything. Even for brushing your teeth, you did not require even the Colgate toothbrush and paste. You used to have some stick kind of thing, and really we used to do that. No buying things means hardly the oil and few things which are not available in the village. Today, the village has also become a really almost a consuming village. Almost everything that you see in the city are there buying. Money has gone to the village. People are buying things. People are buying ice creams. Ice creams were unheard of in the villages. They are going for films. They are going for traveling. People are spending. As the more money comes into the hands of the people, they would also spend. If they spend, there has to be a transaction medium. For all this transaction medium, which is in a growing at a frenetic pace, by currency alone, you cannot meet the demand. This demand, you need digital equivalent where it can be handled, or else you will be in a very tight spot of currency notes not being available. So the country needs to get ready to get the digital currency. So now your question is, how are the bank branches are impacted? Impact on bank branches will really come later on handling the digital currency, for which your technology department, your payment system department, transaction processing department is really augmenting itself, because more people will do the transactions. Like UPI volume itself, in 3 years' time, it has really taken almost every year, it is multiplying 100 times. It means 100% jump. It is doubling. So if this kind of volume is growing, the currency, physical currency of rupee cannot do. If it continues like this, the drain on the RBI to print the currency, sending it to the currency chests of commercial banks. Many of you might be managing might have experience. If you have worked in the currency chest, you can see the kind of load. And from there, once it leaves the currency chest, it is money in circulation. Before that, as long as it is in the currency, it is Reserve Bank's money. You are a custodian. It leaves currency chest, it is in the banking system, and that currency is in circulation. And this printing, circulating to the currency, once it gets soiled, take back. Banks are required to do the soil note and reissuable note. The soil notes would have to be sent back to RBI. RBI will destroy in its incinerator, and it will again print the fresh notes. So this life cycle of currency, from 5,000 crores of 4,800, 5,000 crores of rupees of printing cost, and then circulating cost to about 70,000, 80,000 crores. And then at the bank level, the kind of arrangement that you have, one cash counter for previously, two receipt counter, two payment counter. Now you might have a single counter to handle both receipt and payment. I do not know. The volume of cash handling has gone down at the bank branches level, but still then it is a significant one. So that needs to be handled by RBI through the digital equivalent. So the load and impact on the bank is more of transaction processing. The many banks have been are being asked to constantly that you see what is the headroom available in your transaction processing computer systems. Headroom in the sense your capacity is 100. If your current capacity volume, the average transaction volume is 60, you have the headroom of 40. So the bank boards are required to really define the headroom level for different transaction processing at the bank. So the impact on the bank is you will have to constantly review the headroom available for transaction processing. Before it comes to about 70 level, you really revisit your transaction processing platforms, upgrade the platform. If you cannot, you would really hit the systems. As you know, very recently in India, Reserve Bank is very, very soft. There are many countries where the banks have been heavily penalized for keeping their systems down because the transaction processing systems down. Very recently, DBS Bank, you would have seen, they have been asked to recalibrate their capital requirement. So in the risk weight assets also, the risk weight has gone up. So previously, whatever they were required to do the capital, now it is 1.3. So 0.3 higher capital they would have to really do the work. Many banks have also been debarred in India. Also, one bank had been debarred from acquiring fresh credit cards till they really fix the issue of technology resilience. So these are the issues that will come. So banks would have to be constantly watchful for their operating platform. The trend is many banks are setting up their own operating units. Recently, Bank of Baroda had gone for that. Their IT and ops. Federal Bank itself has got one operating platform. So the operational load on the banks is reduced, and the technology has to be constantly reviewed. That is the impact.
Thank you, sir.
Yes, Arunji.
Thank you. Thank you.
Sir, good evening. Niyati this side.
Yes, Niyati.
Sir, I'd like to just clarify, sir, like in India, banks are highly regulated. Now, the fintechs are working side by side banks. So, as you said, that this banks will have to have good fintech policy. But now each bank will have a different policy. So, is there any plan to bring about a centralized regulation for fintechs by RBI or NPCI or something?
RBI has already issued the policy.
So that is for
policy. They have given the broad policy by saying that you asking the bank, you banks, you formulate the policy, keeping this framework. We will not clearly, we will not give the banks have got tremendous flexibility, but that flexibility is also within a broad parameter. So if you say, is there a common policy? Yes, common policy is there. Reserve Bank has issued this, and that policy has been broadly welcomed. Unfortunately, many banks had really started fintech partnership left, right, and center without examining risk. Many banks have burnt their fingers also. Many banks did the digital lending through the fintech partners, and 80 to 90% of the loans they granted with the fintech partners, they have turned NPA. Keeping that experience in mind, the RBI has said, be careful. So RBI has really doing almost like a big brother role or a fatherly role to the banks.
Niyati, your question was for the banks or the regulation for fintech companies?
So both the things. So whether fintech will be centrally regulated like bank,
Okay,
and the
okay.
second,
Now about really fintech regulations. Whether fintechs, to what extent the fintechs should be regulated. So this is a question which is being internationally debated. There is no clear answer. The banks have got one area of the fintechs, as you can see, about 50% of the fintechs are in the payment systems. Fortunately, in the payment system area, the first regulation came up, regulate the PPI, prepaid issuers. Regulation came. Even the licensing regime came. Rather, before that also, the first regulation from RBI was a general regulation, outsourcing guidelines. And through the outsourcing guidelines, banks were empowered to regulate, to control the fintech firms. Banks did not do that. Banks could not do it. To some extent, some banks did it, but mostly they could not do it. Second thing came is the PPI regulation. The third thing that they did it is the bill aggregators or payment aggregators. Then payment gateways broad framework has been done. Payment banks were set up, they got regulated. A new type of entities, special purpose banks were also floated, they got regulated. Now the next regulation now, which is the timeline is now, is the bill aggregators, the payment aggregators and payment gateways. Then the next line of thinking is bringing out a self-regulator, SRO structure for all the fintech players, for the payment system operators. Then along with the SRA is once the SRA comes, which is SRO. SRO is like all the banks have got SRO in the form of IBA. IBA is a self-regulatory organization blessed by RBI, the regulator and the government. Similarly, in the payment system operator, that kind of a SRO has come. This is one in the payment system. Now, for the same way, for the e-lending circular, very recently the circular has come on e-lending regulation. And in the e-lending regulation, a lot of stipulations have come, and there the regulatory framework has been pointed out that the fintech players who are engaged in the business of lending platform, then e-lending platforms would have to be licensed and authorized by Reserve Bank. That is coming. That has not happened so far. And then again, the SRO structure. Still then it leaves a lot of space for institutions, fintechs, who are do not fall strictly into the area, but they are providing a lot of microservices. Like you just say, there are agencies who really do the support services in KYC verification, support services in do the for many kind of really, when you want to do the credit scoring or examining the credit proposal, you want to do the verification of land records. You want to do the verification of income tax details. There are utilities, there are API calls, banks can do directly with the income tax department also, but they prefer doing it through some agency who can do the packaging of all kind of things, like Perfius and other things. Now the Perfius has, let me not take any name. The different agencies, the technology companies of this type, they would be regulated. Now these account aggregator concept has come, and now they would be really coming. They are being regulated. They are being licensed. The TRADS platforms are coming. They are being they will be regulated. Rather, in the regulatory front, Reserve Bank is quite advanced compared to many countries. Even the developed countries. In the developed countries, they are talking a great deal. They are making big noises that this is a risk, this is a risk. They talk all international forums, and they all theory papers, they give approach papers, full stop. For years together, it goes away. Rather, Reserve Bank comes out with the regulations just to see that banks are protected. Banks are trusted institutions. Banks have been telling again, and RBI has been telling, we know the banks. They are regulated. They are trusted institutions. We are doing our best. Still, then the occasional failures are happening, like PMC and other things are happening, these PMC events. But still, then the customer protection framework in India is not that bad. It is compared to many countries, it is still better. In fact, the benchmarking reports are there all in BIS oversight, BIS sites. They ignore India. But if they really critically examine, India would be at a much better level than what it is. So it is evolving. The fintechs do not like it. Fintechs, they say that it's very, you are curbing innovations, but the innovation itself has to be regulated. Innovation, innovation is that is a very difficult regulatory decision. Apparently simple, but Reserve Bank would have to think many things, because if you regulate too much, there is risk. Innovation would stop. In fact, they building the regulatory sandbox and RBI Innovation Hub is also a form of regulation. That fintech firm will come, and they will not just really launch a product with some bank. Let them come through the sandbox. RBI will watch it. They will see whether they are regulatory compliant.
Thank you, sir.
Thank you. Thank you, Niyati.
Thank you very much, sir. Thank you very much. We have learned a lot of things. Now I invite Dr. Muralidharan, Director IIBA, for a vote of thanks.
Good morning, Hota sir.
Yes.
It was really a wonderful lecture, and listening to you has always been a pleasure. I have been fortunate enough to listen to your early lecture also, and today's lecture was also no exception to that. It was really thought-provoking, and in fact, the areas that you touched are very important. Importance of technology management in banking, the digitalization of payment, its spin-off effect, and the importance of collaboration going forward. These are all, yes, we fully agree with you, sir, because digitalization is the way forward. But at the same time, since we are the custodians of customers' data, it is extremely important for us, whatever collaboration we enter into with the fintechs, we have to ensure that the data integrity and the data confidentiality is not lost. You're absolutely correct, sir. And you gave a wonderful strategy, wonderful journey of pre and post NPA scenario, wherein you were the chief of NPCA for nearly 7 to 8 years. And the success story of RuPay is a witness to the contribution made by you, besides the award which you yourself have got from the President of India. So it was a wonderful experience, sir. And as you're already aware, one of the highlights of this AMP program is the Leadership Speak series. Here, the industry captains and the industry stalwarts like yourself come and give thought-provoking lectures on a variety of contemporary topics for the benefit of the candidates, which I'm sure all the today the about 75 participants, students are there. They would have definitely taken advantage of that, and going forward, this knowledge which they have imbibed will be practically useful to them in the day-to-day operations also. So we are indeed very grateful to you, sir. It was a wonderful session. And so thanks for accepting our invitation and delivering a very thought-provoking speech. Probably we'll be carrying, your lecture also will be uploaded on our YouTube page so that everybody who was interested, other than the AMP participants who are there today, I'm sure there will be many other people who will be interested to listen to your lecture. So with this, sir, we really express our thank you for a wonderful lecture taken by you. And thank you all. Thank you, CEO sir, also. And it was a really wonderful session. Thank you.
Thank you.
Muralidharan sir, only one thing.
Yeah.
Sorry. Mr. Hota, I think IIBF Diamond Jubilee Scholarship 1997 he did RTGS in US.
Yes.
And relevance to India, he participated.
Yes.
He won that.
Yes. Thank you.
In at that time,
It is in fact it is the IIBF who had the earlier name. That time really Diamond Jubilee Fellowship they had given.
Yes, we are Diamond Overseas Scholarship. We have chosen a topic that RTGS in USA and relevance to India. Yes. I think from there we would have prepared that for India also.
Oh yeah. So that is the IIBF's contribution to me. And
no, IIBF is proud of you, sir.
Yes.
Thank you, sir.
Thank you. Thank you so much. Thank you, participants. All the best to all of you.
Thank you, sir.
Thank you, everyone. Shall we close the meeting?
Yes, sir.
Yes.
Thank you.
Thanks a lot.